Hi everybody, this is Ospreyeye from MyChartCoach.com, and we're going to take a look at some of the ticker symbols that were in play on Friday. Okay, first up, let's take a look at RPRX, closed up 13%. RSI at 53 still has a lot of room to run until the 70 overbought zone. Fasto had a bullish crossover at 65, still a lot of room to run until 80. There was a nice bullish crossover on 80X with plus DI crossing minus DI and 80X to the upside. So bulls, you want to see the green line stay above the black line. Okay, so this was a nice move on Friday on a bullish volume spike. Look at the big volume down here, the volume bar, 2.7, almost 2.8 million shares traded. So yeah, the bullish move here was the touch up here on the 50-day simple moving average, which is at 59. That's this green line. That's the level that we're going to want to see break next week. You want to see candles form above that level. Once that happens, that's going to put the 100-day simple moving average on deck and the top of this gap. If you notice back here, there's a gap between the low of day on this candle and the high of day on this candle. Okay, and this red line here represents the bottom of the gap. So that's going to be the big level to break above the 50-day simple moving average. If it can get above both levels, then you could see a potential gap fill and a run up to the 100-day simple moving average. The share price broke above the closing price on June the 28th here, but intraday, but then it pulled back and closed back at that level. That is the top of this current sideways channel, so it's going to need to break above 50 in order to head higher. There's going to be some resistance on these candles here, but yeah, we're looking for this uptrend to continue. What bulls want to see is the middle Bollinger Band at 42 support level hold. There was a bullish crossover down here on MACD. Okay, let's take a look at VNCE. Fasto, or RSI, is currently at 59, so there's still room to run until 70. We've got Fasto at 77 and getting ready to hit the 80 overbought power zone. Nice bullish crossover here on 80X with plus DI crossing minus DI to the upside. Notice how 80X is hooking up. You want to see, bulls want to see the black line cross the red line to the upside, so that would be a signal that the chart is building strength. Now the bullish development here was the close above the 50-day simple moving average, currently at 51. That's the green line here. There hadn't been a close above that level in many months, so when that happens, it's wise to take note, because if it turns into support, many times it signals a breakout higher. Now for VNCE to remain in play for us, it needs to stay above the green line. If it closes back below the 50-day simple moving average at 51, and which is also lined up with the middle Bollinger Band currently at 49, that's going to signal that it's no longer in play. It needs to stay above both levels. It's currently hitting the top of this channel. Notice it's been in this long sideways channel. Okay, and so this closing price here on May the 31st is the key level to break. If it can get it close above that level, you could see a run up here to Dollarland in the bottom of the gap. Notice there's a gap between these two candles, the low of day on this day and the high of day on this day. So the bottom of the gap is lined up with the 100-day simple moving average. That is the next target if the 50-day simple moving average turns into support. Notice there was a descending triangle pattern, and there was a break above, a close above that level on Thursday. That was a signal the chart was heating up. Notice how the chart wound super tight, and the Bollinger Bands were very tight as well. And then now you're getting a break above the upper Bollinger Band. Notice how the upper Bollinger Band is pointing up and the lower Bollinger Band is pointing down. This is all signaling a potential breakout to the upside. We just need to see support hold and follow through next week. Notice there was a bullish volume spike and a bull cross on the 813.5 MACD. It was pinched, and so now you've got the MACD line pulling away from the signal line. Okay, let's take a look at AVGR. Closed up 30% on Friday. First, I want to show you this daily chart. Let's see here. RSI is currently at 69, so it's hitting the above 70 on RSI is overbought, and so it's hitting that level. But if you look down here on Fasto, you've got the Fasto is currently at 43. There was a big pullback from high of day, and that kept Fasto from hitting overbought levels. Nice bullish crossover here on ADX with plus DI crossing ADX to the upside. What happened on Friday, okay, this was a breakout once again on Thursday. Notice the candles came into this very tight flex point with ascending support and descending resistance, coming to a head here. Either resistance was going to break or support was going to break. And then on Thursday, there was a break above resistance. That was signaling more upside potential. And if you noticed on Thursday, it was actually on a volume spike, because the volume on Thursday was this volume bar here was the the most volume in the month of June. And so that was a signal the chart was heating up, and then it followed with a huge volume day, almost 28 million shares traded on Friday. But there was a big pullback from high of day. Look at the long upper wick. You know, the 100-day simple moving average at 110 was our target. It hit 95. What we wanted to see was a close above high close horizontal resistance, which was back here on April 17th. That did not happen. The share price pulled below that level, so it needs to close above that level. That's going to be the first big level to break, just below 70, and then that would signal a potential run back up to dollar land. You know, notice there is an unfilled gap up here between these two candles, so that'll be the level if it gets above the 100-day simple moving average. If it pulls back, and notice that there was this tight channel, and 60 was a resistance level. And so what you want to see is you want to see the 60 level turn into support. So you'd like to see that hold. The candles are riding the EMA's 4 and 8 support. As long as they're staying above the middle Bollinger Band, the uptrend should continue. This is a breakout above the 50-day simple moving average. You know, there was a giant volume spike, so that does signal, you know, possible dilution. You know, maybe they're selling some shares, definitely profit taking. If you look at accumulation distribution, check out the big spike down. So the giant spike, that's a reflection of the shares being sold. And then notice this is shaken money flow, and there's a spike down on the histogram. So what you have is you have the bearish divergence here. You know, you have a green day. You know, it's up 30%, but you have big spikes down on accumulation distribution and shaken money flow, and that's just a signal of you know, a dilution. You know, they were selling shares possibly into the run. If you look down here at CCI, the commodity channel index, notice there was a big spike up to 460. You know, when you get above 200, that gets to be very frothy. So you know, this is signaling that it's you know, potentially overbought. So just keep that in mind. It also is a signal that the chart has been building strength. So you'd like to see it you know, stay above 100, but it is signaling it's getting frothy. And if you look down here on the money flow index, it's up here at 92. Okay, so yeah, so this was a big move for AVGR. And if you look here at the 15-minute chart, we'll show you what you need to look for on Monday. Notice here that this was the big move. This is the uptrend. We were pointing out in our chat here the intraday climax and the pullback from high of day. You know, this is the classic pullback followed by a red candle. This was signaling a top, and then you have the breakdown below EMA 4 support. That was signaling the share price was consolidating. And what you like to see when you get a pullback from high of day, you want to see high of day tested again. And when it came back up here at 145 and failed to get back up near that level and started stalling out, that was a red flag. And so it formed this symmetrical triangle pattern. And notice ascending support had been holding throughout the day. And so when you had the close below at 3 o'clock, that was a red flag. The chart was breaking down, and then bam, you had the big follow through. Also, the big red flag, and what we like to follow is we like to see candles staying above the middle Bollinger Band. And then here at 2:30, there was a close below. That was a red flag. The chart was breaking down as well. So the middle Bollinger Band turned into resistance. The next big support level below is the 50-day simple moving average, and that did hold. So we want to see that level hold on Monday. That's at 62. If it breaks, you could see that drop down here to the 100 simple moving average at 54. So yeah, you want to see the 50 simple moving average hold and then get back above the middle Bollinger Band at 73. Okay, so yeah, keep an eye on AVGR. We're going to be looking for continuation of the uptrend next week. You know, we want on a pullback, you want to see the middle Bollinger Band on the daily chart hold, and that would signal the uptrend still intact. Okay, take a look at ZN. This is in the energy and exploration and production sector, and this is stock that has been doing, you know, it's in the energy sector. It's been doing really good. You know, a lot of the stocks in the sector are super beaten up, but this is, you know, one that has been performing very well. You know, it's currently overbought on RSI, currently at 87. You know, it's just been pushing super hard. You know, you've got Fasto up here. You know, it did pull back because notice the upper wick on the candle on Friday that pulls Fasto back. You got the crossover here on ADX with plus DI crossing ADX to the upside, and notice the very strong uptrend Back here on June 6th, there was a close above the middle Bollinger Band, and that signaled the start of an uptrend, and it's been riding EMA4 support ever since. You could just be riding this the entire time. You know, as long as the candles are staying above the EMA's 4 and 8 support, the uptrend's very strong. It's pushing really hard right now with the close well above the upper Bollinger Band on Friday, you know, with the pullback from high of day, so you could see the candles work their way back into the bands. If that happens, EMA4 at 465 is your first support level to hold. You know, that would be the first support level on a pullback, and then as long as it stays above EMA 8 at 404, the chart is still super strong. And notice there was a big volume spike on Friday. What we do when a stock is breaking out like this, we like to look at a weekly chart, and so here on the weekly chart you can see it's overbought as well with RSI up here at 93, and then you've got Fasto at 82. Plus DI shows the bulls are clearly in control, and so check out this chart here. Each candle here is 1 week of trading, and so this has been on a really nice 5-week run. This is a sweet multi-week run. Notice once again this candle right here. Okay, that this was at the end of April, the close above the middle Bollinger Band. That was your clue the chart was heating up, similar to these candles right here. Okay, so you're when the close is above the middle Bollinger Band, that's when you want to take notice. Now, notice that the top of this wick failed to break above the 50. This failed to even you know, get above it interweek, and so what we look for is a close above the 50-week moving average, and that happened on this candle right here, the first week of May. That was your signal the chart was in play, and notice how it held on the pullback, and so it's been very strong ever since. And then once you had the break above the 300-week moving average here on the second week of June, that was a signal that it was ready to break out higher, and it's really ran hard since then. And so you know, it's been a huge winner. Congrats to everybody that's been following our charts in TA. We keep putting out alerts, and this thing keeps heading higher. And so you can see here there's no resistance on this weekly chart except for the top of this wick. If it pulls back on the weekly chart, what you'd be looking at is EMA4 at 393 is the first support level. Notice the huge volume behind the move. You know, volume has been increasing on the way up. If you take a look at down here at MACD, you'll see that the MACD line is getting very vertical. Notice how it's gone parabolic there on both time frames. So it's getting really steep. When you get that steep trajectory, it is unsustainable. So this thing's going to cool down at some point. And so if you look here, you know, since the weekly chart's smoking and the daily chart's smoking, we have to go all the way out to the monthly chart to find resistance. So this is the monthly chart. Each candle represents 1 month of trading. Notice it is overbought on RSI and Fasto. Once again, big move on ADX with plus DI breaking out above minus DI and breaking way out to an extreme move. And then if you look down here, each candle here represents 1 month of trading, and so you had this you know, this long downtrend, multi-year downtrend, and then there was a this is a little difficult to read. Sorry, there's a lot of different lines in here, but you notice there was a triangle pattern that had formed. There's a symmetrical and a descending triangle. You know, there's a sideways channel. Basically, the big thing is there's a break above that last month. Notice this candle, the big break above that level, and so that was telling you that the chart was really heating up. It broke above the 50-month moving average. You know, that had happened before right here, but it failed to turn into support. But the break above that level back here in what is that, June, was your big signal that it was really heating up and smoking. You know, it started heating up in May with the break above intermonth, but then it pulled back below, and so last month it closed above the 100-month moving average, which was another signal that it had more upside potential. You want to see that level hold at 313 if it does pull back, and then this month it's breaking out even higher, and so currently where it's hitting is back here in 2011. If you look at this key high close back here in 2011, notice there was a long upper wick on that candle. It closed right at that level for the week, and so you want to see a break above that level at $6 it's just below 6. You want to see it close above that, and then that would put 7 on deck. That's back here in 2009. So we're going way back on this chart to find resistance. As you can see, it looks like it's making its way back. Up here, the top is back here in 2009. The high close at what is that, 14. 1450. So that's the ultimate upside if it can keep breaking through this resistance. I mean, this is a super parabolic move. We can see, you know, we'll see what happens. If it does correct, you want to see that 100-month moving average turn into support. But yeah, very cool move. Congrats to everyone that's trading ZN. Okay, talking about the energy sector, let's take a look at DWT, and you can see this is 3 times inverse crude. This is a chart we've been working on showing you a simple way to trade just following EMAs 4 and 8. And when you get a break above EMAs 4 and 8 with the close above, it's a signal to ride higher. And then when you get a break below, it's a signal to exit. And so if you look here, you know, we're showing how you could exit here on the break below, and then you could enter on the break above. EMA 4 is the pink line, EMA 8 is the green line, and then it come up here, and then you can see the exit when it closed below, then it came back down, and then you see the close above, it was the enter. And then the last time we made this chart, the candles were still above EMAs 4 and 8. This was the candle on the last time we made the chart, and notice that a couple of red candles followed, and then you have this candle right here with the break below EMA 4. So that was a signal the chart was cooling down. And then the next candle right here on the what is that, the 27th of June, that was a signal to exit. That was the close below EMAs 4 and 8. And so if you were following that strategy, you would have exited there, you know, and then it came all the way back down. Now you had a close above EMA 4. You know, with that strategy, you could exit with the close below EMA 4. And that's usually the first signal that the chart is cooling down. But once you know, if you ride until EMA 8 breaks, you know, you won't get shook out as quickly. And so if you look here, there was a break above EMA 4 last week, and then now you've got the break above EMA 4 and 8 on Friday. And so this is a signal to enter again. And so now that the candles are back above EMAs 4 and 8, as long as they stay above both levels, the signal is to keep riding. Okay, and so the key level to break is the middle Bollinger Band, currently at 37.42, and so it closed right above that level on Friday. You want to see the level turn into support, and if that happens, then 43.44 is back on deck. You're looking at a potential run back up to this high close. And so, but it has to turn the middle Bollinger Band into deck, into support to have these high levels back on deck, have 44 back on deck. If it fails to turn that into support, or if there's a close back below EMAs 4 and 8, it will no longer be in play for this swing trade strategy. Okay, so yeah, keep an eye on DWT. We're going to see if it can get a new uptrend going. Okay, let's look at AVEO. This is another stock that has had a really nice uptrend. You know, it's similar to ZN, not the same, but you can see here it's breaking out. It's got this nice run for the last couple of weeks. It's been riding EMA 4 support, and then on Friday it broke out higher, and you can see volumes increasing again. You've got an increasing volume pattern. You've got you know, MACD looking good on both time frames. It is overbought on RSI and FASTO at 89 and 96, so overbought on both levels. If the candles do pull back, what you want to see is you want to see this pattern continue if you're a bull. As long as EMA 4, the pink lines were holding, the signal is to keep riding. Okay, so the candles, the chart is super strong when candles are riding EMA 4. Once that breaks, you could see it drop down to EMA 8 at 223. The chart's still super strong when EMA 8 is holding, but if that breaks, that's when you could see a big pullback. You know, you could see a potential drop all the way down to the middle Bollinger Band, and most traders don't want to ride for that kind of correction. So yeah, so the chart is still super strong. So let's take a look at the weekly chart and try to find some resistance here. And if you look, it's breaking out on the weekly chart, so you could see it closed above the resistance here from what is this, back in June of 2015. That was the high close for 2015. You know, the highest, you know, this closed above the highest close of 2016 and above the highest close of 2015. So now, you know, and it's up here in 2014 levels. You know, it's breaking out you know, to the high of 2000 2015. Okay, so that's going to be the next resistance levels to break these the upper wicks on these weekly candles. So currently at 290, you can see it hit that level and pulled back. If it breaks that, then you're looking at 350. But this is a really strong weekly chart. Notice it's a multi-week run. It's on a 3-week run. The candle last week is floating above the upper Bollinger Band. So that was an extreme move. And you do have RSI at 90 and you have Fasto at 96. So it is very overbought. So if it does pull back, basically $2 is the big support level to hold down here at EMA 4. And you want to see the candle stay above the 100 week moving average. You can't see it on the chart, but if you look over here, you'll see the 300-week moving average is at 393, and so that will be the big next simple moving average resistance level to break on the weekly chart. If you look here on the monthly chart, you can it really cleans up the weekly chart, and you can see resistance a lot better. And this is the 2015 resistance that we were talking about down here in the $2 range. So you want to see that level hold. If it pulls back, you want to see that level be support. And notice it's lining up with the EMA 4 at 189. Resistance back here in 2013, this was the support level. So it closed above the 2013 support level. You want to see that level hold. If that happens, then there's not a whole lot of resistance all the way up here to $5. So yeah, this is a big move on the AVEO monthly chart. You know, you want to see the 50-month moving average hold. It's at 132. That's the top moving average on this chart. As long as candles form above that level, the uptrend should continue. Okay, yeah, and there was a PSAR bull flip last month in June. All right, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.